Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar displayed a strong rebound on Friday and currently holds in positive territory, which is seen around the 60-day moving average, following the somewhat disappointing US jobs report or the non-farm payrolls, which has left investors questioning the next move the US Federal Reserve will make at its two-day meeting on the 25th and 26th of July. However, Friday's payroll data is not yet weak enough to stop the US central bank tightening, even though job growth has slowed. According to the US government, the data on Friday showed that US employers added 209,000 jobs in June, a solid monthly gain, but down from May's revised 306,000 jobs, with the unemployment rate falling from 3.6 to the previous in May of 3.7. Meanwhile, the number of unemployed people currently stands around 6 million in June. Looking ahead to this week, we've got the RBA Governor Phil Lowe speaking on Wednesday, and in overseas, the US CPI data, which will dictate to the Fed's current policy in its rate decision. If we do see a slightly higher CPI number, then that would possibly lock in two rate hikes, one in July and the other in September. Looking at the current pattern though, let's see if the market does actually drop away from these highs due to the weak technicals, and therefore rejecting that 66.85.95 previously contested highs, along with that with the 60-day moving average, and look back towards a support level of 66.30 or even down towards 65.90 and the base seen at 65.40. With the lower than expected US job numbers, the market is now somewhat finding a stronger euro as the dollar index, which measures the greenback strength against a basket of six major currencies, plummets to 102. Looking at the current pattern though, I'm not fully in support of this current rise, and no doubt could see again a rejection close to that 110 area. If witnessed, then I feel the market remains on track towards its objective of 107.70 this week. But keep an eye on that 110 level because it does play an important role in the current trend. The market plunged through the bottom side of this range after the technicals for some time have been declining and finally get that bearish outcome, which now exposes the region of 140.5. But there is seen at present a bit of short-term recovery or maybe some technical buying. And as the market looks towards 142.80, we could see a further gain up towards 143.40. However, we're a little bit in a mixed environment due to the break of this trend, and therefore could give a little bit of conflict in terms of how the market will travel in the next few days. Overall, though, any pullback towards that 140 to about 141 level should find good demand and eventually see a recovery and take the challenge back to 145. So in the short term, for the beginning of this week, the bears are in control. With much talk about the Bank of England hiking rates, there is still showing good support in terms of how the pound has been unfolding over the last few days. And with Friday's price action has strengthened due to the ADX holding to a strong bull trend, and also the technicals are married up to a somewhat positive bias. However, looking towards the top side, there is still that key level around 128.65 that was hesitant or rejected from this shooting star, therefore could see a pullback and look towards the level around 127.20.25, as I feel the last 2 days has slightly overextended itself. So let's see if we do see a pullback at the beginning of the week. The gold outlook, well, the market has found a bit of momentum as the dollar weakens, but therefore we can see there is lack of interest when it comes to the technicals. So returning back towards the top side of its range, somewhere around 1,930, I feel the market may actually pull back and still keep to that view of 1,906 from last week. If we do see further weakness, the broader pattern still holds to a negative bias, and eventually I do anticipate we should reach the region somewhere around 1,850. From the Dragonfly Doji on Thursday, the market rallied further on Friday, but hitting the top side of its range at $74 a barrel. Now, it do look towards this level as an important, or at least a next possible move, as a break above here would see $76 to $78 as a potential target. The technicals have firmed up, and therefore a break above here would give us further indication of the next direction. Other than that, a rejection from there, well, the market just will repeat itself as previously seen, all the way back towards $67 to $68 and a base holding at 65. So the start of this week is important. So let's see if the market can break above 74, or are we going to continue to see this broader range or the sideways pattern that's been locked for quite some time now at $65 to 74. Well, that's a wrap for the start of this week. Thank you very much for joining me. As always, look out for the interest rate report. I hope you enjoy the rest of the day.